Hello, my name is Dik Vos, CEO of SQS, and I'd like to present the first half one results of 2015 to you. SQS is the world's largest independent software quality and testing assurance company. We were founded over 30 years ago, and we specialized in quality assurance and testing of industrialized software applications in 6 key verticals: banking, utilities, insurance, energy, and also telco, retail and logistics, and not to forget manufacturing. We are globally present and we have expanded significantly in the last few years in the United States. 2015, the first half of it, was again a great success in further achieving our strategic goals. Not only did we have a significant growth in revenue numbers of 16%, of which 11% was organic, and that was mainly driven by our further US expansion. Our profitability further grew, mainly due to contribution of managed services, but we've seen also some pressure on regular testing services, to which I will come back in a moment. The CapEx investments, which we did mainly for acquisitions and further expansion in our India test center, has resulted in what I would call a good debt position, because the investments were mainly driven to drive further revenues and contribution to our company and our US expansion, and preparing, of course, the US test center for further offshoring from our European and US presence. Our order intake was a record high in managed services, and we had over 150 million, further improving our visibility in our business. And we also seen that now our managed services are 48% of total business, up from 44% last year. The growth and the execution of our strategy has now been that we are in the US with over 20% of our revenues, mainly driven due to the acquisitions we've done, which I mentioned before. Our managed services at 48%, and we have also completed our European footprint with BitMedia. These are all steps important for our strategy and our success on maintaining and growing our position globally. But we've also seen our pressure in what we call regular testing services, more our heritage business in mainland Europe. There, to economic pressure and economic downturn, we've seen some pressure on prices, but we've tried to avoid a further impact by not only critically looking at some engagements and disengaging, but also looking at staff and headcount reductions. We have successfully, I believe, further executed our strategy. We have looked at growing our verticals and strengthening them. First of all, with an acquisition of Thinksoft, now SQS BFSI India, looking at our further expansion globally, having more global presence and having less impact on either a European or another economic downturn, enlarging our portfolio, but also significantly making sure that we are in the driving seat, that we are seen as changing and driving software initiatives globally. We are the largest specialist consulting company in the world, and we maintain that going forward. The acquisition of Tricentual and the acquisition of Galmont in the US has given us a significant presence in the market, which is at the end 47% of the world addressable market. We embarked on the US nearly 3 years ago, and we now have a run rate that exceeds $65 million in revenues. Tricentual, a company that brings us project management, program management, portfolio management, and Galmont giving us more closer to the US SQS traditional business, the testing services, QA and testing services around managed services, but also providing us with a nearshore test center, avoiding us having to do a major investment in a test center at us. The cross-pollination and the synergies that we now can create by having a strong program management capability, driving software initiatives, and having the testing and QA capabilities complementing our own presence within the US can only mean that we can accelerate our growth in the US. This has become now a famous slide, and every year we have moved as a company and have increased our market positioning and market share in the world. The global market for testing is a market of around 15.7 billion. I always say large enough for every one of us. But I think far more important is the market growth. It is still a market that is growing significantly and outpacing the traditional IT market. On the far left of this slide, you see our positioning globally against the comparable standalone independent QA and testing companies, and there we are by and large the largest in the world. On the far right, you can see us against the SIs. That is the environment where we really are competing. And there we have now moved up from number 10 last year to number 8. And that is again a significant step forward for our company, showing proof of the successful execution of our strategy. We now have a run rate that goes beyond 300 million a year, and we have given ourselves another challenge on becoming number 7 going forward.
Hello, my name is René Gawron. I'm the CFO of SQS, and I'm happy to take you through some of the key financial metrics. H1, as Dik already said it, was a very good first half. We have posted our record top line and our record high PBT we've ever had in the first half. And this is despite the issues we've seen in regular testing services, and I'll come to this in a moment, how we have addressed those issues going forward. When we look at the various lines of business and the gross margins, it is important to take a look at the two columns at the left-hand side. Starting with managed services, now nearly 50% of our business, almost 36% gross margin. The reason why the gross margin in this segment is the highest and has continued to move up is because we can deliver quite a part of those deals from nearshore or offshore test centers. We can apply elements of automation and industrialization to produce the revenue in a more efficient way. And that has helped us to move up margins and also to protect gross margins against competitive pressure, which is always there in the overall market. The other important strategic segment, still around just 10% of the business, is specialist consultancy services. This has been around 10%. We expect to now that this goes up above 10% because the acquisition of Tricentual we did in the US will fully contribute to this market segment going forward. Also there, healthy gross margins. In regular testing services, which still continues to be an important entry segment into our market. Very often you start many deals with kind of small teams of consultants. This is very much a commoditized business. We've seen there was increased margin pressure in that segment, and we've taken actions by reducing corresponding headcount, but also by disengaging from less performing deals in that segment, which contributed to the lower margins. This is further evidenced if, as you follow me on that slide, on the lower left-hand part of the slide, you can see we have further reduced the number of client engagements. We feel that a number of clients, which is anywhere between 300 to 400 in a year, is a sufficient number to have just the right exposure and the right kind of portfolio of large clients, but also of the ones which have a potential to grow. We have added almost 50 new clients in the first half from the two acquisitions we've consolidated for the first time, BetMedia and Tricentual, but nevertheless we managed to further reduce the number of overall client engagements, and we will further continue to do this if the clients are not performing very well. On the investment, which is a little bit highlighted on the right-hand side, we've done investments nearly 18 million into our expansion in the US. These were the cash parts of the investments we did for the two companies and in the build-out of our India offshore test center. This was an aggregate about 18 million euros. So what Dik said before is right, it produced a kind of good net debt. I'd also like to remind everybody, we always have a seasonality that in the first half of a year, we always increase our work in progress, that is the uninvoiced services we have performed, and the receivables. which is always leading to a lower net cash or net debt position than we have at the year end, where typically clients cash out all their budgets to us. So we expect again a full profit to operating cash flow conversion in the second half of the year, as we've had it in all previous years. This is a seasonality of our business. When we look at the verticals, we still continue to focus on 6 strategic verticals, starting with banking, financial services and insurances, BFSI as the largest one, and with telecommunications as the smallest one. There hasn't been a lot of change, and we're in the split of those verticals, and we're quite proud to have quite a good variety of verticals where we operate in. It also underpins that software testing and software quality management is needed in all kinds of industries. It just requires that the organization is big enough and that they have complex enough IT systems. So then in such case, they will always need software testing, quality management. When we look at the regional split, you may say at first, well, it hasn't changed a lot. There's still roughly 90% of our business is coming from Europe and the rest is coming from outside of Europe. This will now substantially change as Tricentral was only consolidated for a 1-month period in the first half, and Gelmont is a post-period event. So going forward, as we said, the US, once they contribute for a full 12 months period to our results, they will account for nearly 20% of our business going forward. And we are bringing, with the other roughly 5% of business from the Middle East and Southeast Asia, we bring our regional split much more in line with how the market is split up.
SQS will continue to growth, and we will continue to execute on our successful strategy. We will see to it that the impact we've seen on RTS will be diminished, and our total RTS revenues needs to go down to 30% of total. But we will continue on our strengths. We will continue managed services and grow it out to beyond 50% of total revenues, and we will continue to grow specialist consulting, especially in the US, thanks to the acquisition of Tricentral. At the end, specialist consulting needs to be above 10% of total. We had a record year on profit, and we had a record year on revenues. Our order intake was higher than ever. But despite that, we do see the impact of our economy.